How's everybody doing this morning? A nice, beautiful Saturday morning here. Thanks, first off, to TradeThirsty for inviting me to the presentation. And most importantly, thank you guys and gals for getting up early or staying up late, wherever you are in the world, to listen to some great education. Friends with most of these guys, or all these guys actually, on the show today. Serge had a great presentation, as well as Hubert. I know we got a good lineup following. So I'm going to try to keep this short and concise, and feel free to ask all the questions you want throughout the presentation. I'm not ignoring you by any means. I just want to make sure we get through the meat, actually teach you the strategy, the setup that actually works. And so it's something that you can take, maybe play with over the weekend if you wish, and then I'll get to your questions. And if we have time, we'll look at some symbols and some live markets and things like that. So if that sounds good, we're gonna go ahead and get started here. Hopefully the audio is good. Let's just do one quick audio check. Type a 3 in the chat if you can hear me, or that there's some sign of life out there. Just want to make sure I'm not speaking into a black hole. You should be seeing the 3-point price action formula to spot market reversals. So looks like we're all good. So let's go ahead and get started here. And let me get my slide. Yep. All right. Okay, before we get started, we must always start with the risk disclaimer as required by our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So I know everybody's familiar with the risk disclaimer. So while you're reading that, tell me where you are from. Where is everybody tuning in to in the world? I am in LA. Actually, that is lower Alabama on the Gulf Coast, not Southern California. I am near the Gulf of Mexico. So we've got Florida, Toronto, West Texas, North Carolina, India, welcome. California, Montreal, South Africa, interesting, Detroit. All right, people from literally all over, all of the nooks and crannies and corners of the world. Iceland, you've got to be the first, and Zimbabwe and Georgia. All right, so risk disclaimer, as Jeff said earlier, don't trade with your milk money, your mortgage money, your rent money, your child's educational funds. You can lose money trading. So let's go ahead and get started. I'm going to introduce myself once again. My name is Silas Peters. That's me standing in front of my alma mater at the University of Alabama in Tuscaloosa, standing there with my 2 beautiful daughters there. And just some pictures to show that I'm a human being, that, you know, just getting out with my wife and family and kids, hanging out the bay, trying to get some fresh air in this Corona conundrum, if you will. You can see my 2 girls actually made some homemade masks. They didn't make any for me, but as long as they made some and they're safe, that's all that's important. So 3 days after I graduated, I sold my car, packed up my small belongings, and I headed north. I drove straight north to the great city of Chicago, the old Windy City. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And I was really bitten by the trading bug and never looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spectators, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. I've also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But it wasn't always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. First step was obviously learning. School does not teach real life experience of the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. I blew up an account, then I blew up a few others, and what I like to call revenge trading. I'm sure some of you can attest to that. I finally went back to my roots, settled down, worked my process, and found overall consistency. But enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. This is a poor attempt at humor. I found this on the internet, and I thought it was funny at the time because I feel like it's the perception of what those on the outside looking in at us traders think that this is what we do. We're surrounded by dozens of monitors. We've got lines blinking and numbers bolting here and there and widgets zipping and zooming all over the place. Certainly not the case. Now, my desk did look like this in Chicago for obvious reasons, but this is certainly not the case. I've paired back to a handful of monitors for quotes, charts, trading platforms, and the internet for day-to-day operational activity. But all this does is leads us to this, paralysis analysis. So who here has been a victim or is a victim of paralysis analysis? I'm raising my digital hand. I've been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has or is a victim that they thought they've done all the analysis they possibly can, they've crossed the T's, dotted the I's, put their finger on the mouse, get ready to pull the trigger, and then, uh-oh, this line crossed that line, or this did that, and then it negates or contradicts our analysis and thinking. So a lot of you are actually have been there as well. And so hopefully this presentation is going to help eliminate the paralysis analysis demons. So I appreciate everybody's interaction so far. Tell me what you trade. I'd like to see what kind of crowd I'm talking to. Do you trade stocks, options, futures, Forex, maybe cryptocurrency? I trade all of these actively with the exception of crypto. I do have some accounts, if you will, across the internet. Don't even know how to get into half the damn things. I view it more as a lottery ticket, but I do trade stocks, options, futures, and Forex on an active basis. So we've got, let me see here. Somebody typed in go LSU. I just saw that. I'm gonna kick you out, JB. I'm just kidding. So we got stocks, a lot of stocks and options traders, volatility collapse, interesting futures, swing trade stocks, indices and the FANG stocks, options and crypto. Okay, all right, FX. Yeah, a lot of options traded, weekly options and stocks. That's cool. Most of the audiences are usually stocks and options, and then a good healthy mix of futures and Forex, all of the above. All right, cool. So that's great news because what I'm going to share with you works in all those markets. It's highly accurate, it's profitable, works in all time frames, and it's 99% mechanical. But most importantly, it's simple. So again, we're not here to teach rocket surgery today. We're going to keep things simple. So I have an agenda and promise to you. We're going to learn a simple mechanical setup that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to stop and ask, have I fulfilled my promise? And I hope that I see a lot of yeses. So speaking of promises, if you're here today, you may have seen or read something about the $10,000 trade promise. Well, full disclaimer, I'm not going to promise you anything in trading or in life, but these were trade setups that we talked about in multiple free presentations such as this one. We talked about them for weeks and weeks and weeks, if not months, about a very particular trade setup that was on the horizon. And they, you know what? They triggered and they went on and met their $10,000 trade objective. We also talked about sleeper markets in coffee and orange juice. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out at this time of the year. Does that mean that we went and got long, that we went and bought coffee, bought OJ, bought call options, sold put spreads? No. So sit on your hands, wait patiently for this very particular pattern to set up, the one that you're about to learn here momentarily. And you know what? They triggered. They triggered and they went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about trades in corn, beans, and wheat. This is corn, this is beans. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to quiet out or get bottom at this time of the year. That's exactly what they were doing. It's like they were being lulled to sleep by the market participants. We had favorable weather out in the Midwest, and they were getting quiet. We knew we did not go get long these markets, but we knew certainly not to be short. We said, wait for this pattern to set up and trigger. And they did. They went on and met their $5,000, $6,000, $7,000 per contract price objective. So this presentation is not all about futures or not all about commodities. I'm just trying to make a point that these occur over and over again across all markets, and I'm going to prove it to you. So who here is ready to see the setup responsible for these very recent trades? These are very recent trades that just triggered. This is 800 S&P points right here. This is 160 points in cocoa. This is 300 pips in the Aussie Kiwi. And this is $40 or two $20 trades in Facebook. So who here is ready to see the setup responsible for these trades? All right, yeah, absolutely you are. Otherwise, you probably wouldn't be here wasting your time. It is, drum roll please, the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. Who here is familiar with the 1, 2, 3 pattern. I would suspect 99.8% of you are. I didn't invent it. It's been around since the beginning of time, since the beginning of technical analysis. One of the most fundamental technical patterns in the textbooks, but highly, and I mean highly, overlooked by most traders. So just real quick, this is one of the first patterns I learned when I started my trading journey, and it worked. It actually worked. I was fortunate to find something that actually worked when I first began. But you know what I did? I kicked it to the curb, went off the reservation, and started chasing shiny objects. I'm sure a lot of you have done the same. So pretty much everybody is, a couple knows, and that's great. So I'm going to show you how powerful it is. So let's talk about the setup. It's price action based. The pattern is comprised of a low and a higher high and a higher low and a break of that higher high. In the case that we're going long, same rules apply, but inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings. Can be an indication of a change in trend. Can also be found within a trading range. So you may say, hey, isn't this a counter trend strategy or a reversal type strategy? And in essence it is, but we're going to talk about ways that we can filter some of these out to even put the odds more in our favor. I will stress it works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability technical patterns such as head and shoulders tops and bottoms, double tops, double bottoms, and so forth. So let's take a look at the mechanics here. We're going to start here with the 1, 2, 3 top. This could be Pepsi stock. This could be pot coin. This could be the pound versus the New Zealand dollar. It doesn't really matter. We're just learning the very basic principles. So point 1 here is the highest peak, and we find that resistance. And once we pull back, we get an established number 1. So we pull back, and once we stop making these higher low or these lower highs and pull back, we get an established number 2. We pull up, retrace up, and then back down. That gives us our established number 3. 1, 2, 3. Now, we could have come up here, retraced up here, or even up here, as long as we don't take out that number 1 high. We have a 1, 2, 3. Now, for a 1, 2, 3 top trader, we know that we're looking at short on breaks or closes below the number 2, which you can see that's exactly what happened. Let's talk about the 1, 2, 3 bottom. Here we have the same rules apply, but only in inverse. So the market has its lowest low, finds support, pulls up, giving us an established number 1. Market trades up, pulls down, giving us a 1, 2. Once the market stops making these higher lows and pulls up, we get our number 3. Again, we could have come down here, or even down here. As long as we don't take out that number 1 low, we have a valid 1, 2, 3 bottom. Now, for a 1, 2, 3 bottom trader, we know that we're looking to get long on breaks or closes above the number 2. We don't know what happened in this example, but that's what we would be waiting for. All right, let's look at some chart examples. Look at the 1, 2, 3 top here. This is a daily chart of the Aussie dollar, the 6A. If you don't trade futures, you could look at FXA, the ETF. If you don't trade futures or ETFs, you could look at the Aussie US in the Forex market. Same setup and patterns and principles apply. So on a daily chart, and for this example, we're going to focus on a 52-week high or perhaps a 52-week low for 1, 2, 3 bottom. That's not an absolute rule. It's nothing set in stone that's going to give you your highest probability setup, but we'll talk about ways later that you can dial that in and say, look for every 6 month, 1, 2, 3s, every 90 days, depending on how frequent you want to see the opportunities. So here we have a red number 1 circle. Why? Because it's a new number 1 point. It's a 52-week high. Here the market has the high. We pull back and trade up and back down. Give us our 1, 2, 3. Now it's a smaller retracement. Again, we could have come up here, or even up here. It's still a valid 1, 2, 3. 1, 2, 3. So on a 1, 2, 3 top, again, what? We know that we're looking to get short on breaks or closes below the number 2, which you can see very clearly what we did right here. So you say, all right, that's great, Silas, I already know the pattern, but what about the other important ingredients of the recipe? Where's my risk, my stop? Where am I taking profits? Where am I putting limit orders? Those are all very important pieces. So let's talk about that. Your initial risk is above the high of the number 1. Your initial target is the distance between the high of the 1 measured to the low of the 2 measured down. So we measure from here to here and then down. And that's about 225 ticks or $2,200 per contract in this example. So you'll say, yes, you'll notice immediately, let's say 1-to-1 risk reward ratio. But We'll talk about this later on in the presentation about how we can quickly cut or mitigate that risk. So it's very important to let the market start to materialize in your anticipated direction, which is down in this case for a 1, 2, 3 top. So once we start breaking down, making these lows down here, we can quickly adjust our stop. Well, we'll talk about stop placement. I mean, it really ultimately depends on the trader, but where's the next logical area to move your stop to? I would say the next logical area is the next key area of resistance. So once we start breaking down, we can quickly move our stop here above the high of number 3 resistance. So we're cutting our risk by 50, 60, or even 70%. Let's look at a 1, 2, 3 top in Walmart. Another daily chart here. We have a red number 1 circle. Why? Because it's a 52-week high. It gives us our number 1 point. Number 1, 2, 3, and we already know what 99% of other traders are struggling with. Excuse me. Well, where are we getting in? And then the other traders are asking, well, where am I putting my stop? Where am I taking my profits? We know that days in advance. 1, 2, 3 top. We know that we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1, and we know our initial target is the distance between the high of the 1 measured to the low of the 2, measured down, or about $5 in this example. Let's look at some chart examples of the 1, 2, 3 bottom. This is a 15-minute chart of the E-mini S&P. So on an intraday chart, we're obviously not going to be looking for 52-week lows or highs. That wouldn't make much sense. So on an intraday chart, we're looking for what's called session lows. So whether you trade a tick chart, a 5-minute, 15-minute, so on, we're looking for what's called a session low or session high. How do I define that? I define the session low or session high as going back to the Globex open. So if you're not familiar with futures and Forex, they trade darn near around 24 hours a day, opening up on Sunday afternoons, trading into the Asian session, into the European session, into the New York session, shutting down for about an hour at the end of the day, reopen, rinse, and repeat through Friday afternoon. So wherever you start your trading day, I start mine around 6 a.m. Central. I'm only looking for new highs or new lows from that point on into the close. So if you start your trading day at the 3 a.m. European session, maybe it's the 9:30 Eastern New York cash open, maybe it's the lunch session, maybe it's the last hour of the day. You're looking for new highs or new lows. So here we have a session low in this 15-minute chart, 1, 2, 3. Now aggressive traders might be looking to get long on the initial break above the number 2 here, working a buy stop, a tick or 2 above the number 2 high. You're triggered into the trade. A couple of alternative entry methods that I prefer is either to wait for the market to come back and retest the breakout level, which it does more often than not, or wait for the market to come back and hook back up and through that number 2 breakout area. So utilizing that entry method, one of 2 things is going to happen. Sometimes you're going to potentially miss out on winning trades, right? Sometimes the market will bust up out of the number 2 and zip up to your profit target, leaving you in the dust. No need to get your feelings hurt. There's plenty of other trades, markets, and time frames that you could begin analyzing. But what is it also going to do? Sometimes the market will come up and then roll back over and come stop you out. So utilizing this second entry method where we come up, down, and then we come back and hook back up through, it's going to keep you out of potential false breakouts. All right, let's look at the 1, 2, 3 bottom here. This is a weekly chart on Apple. Hell of a way to catch some longer term position type moves here. We have a 1, 2, 3 multi-week low, also have a high probability double bottom, 1, 2, 3. We get a breakout here on this large bullish candle, and then we trade sideways for a few weeks. Market comes back down, retest, and or hooks back above. That's our confirmation to get long Apple. How? We buy Apple stock, we buy call options, call spreads, sell the money put spreads, whatever your flavor or style of trading is. All right, so this is an example of a failed trade. Don't start throwing banana pills at me. There is no holy grail in trading or in life, but we're all adults here. I'm sure you already know that. But this is a trade I like. I probably took this in my live account. 5-minute chart of the E-mini S&P. Vertical trend here. We have a trend line break, 1, 2, 3. Market breaks down here. If you're getting short on the initial breakout, you're short. Or if you wait for the hook back down through, you're short here and you're favorable by maybe 1 or 2 points there. I'm not sure. If you exercise any type of money management, you're stopped out at the next area of resistance above the number 3 high, or if you sat on your hands and didn't do anything, you're stopped out at the initial risk level above the number 1 high. So the market comes up. Now notice what we get here. We get a new number 1. This high is higher than that high, so we get a new count. 1, 2, 3. Market breaks down, gives you a retest, ends up being a nice profitable trade. Let's talk about the no trigger trade or the voided trade. It's neither good, bad, nor ugly. It is what it is. So here we have a 1, 2, 3. We know we're looking to get long on breaks or closes above the number 2, but what happens? The market decides to sell off, takes out this number 1 low. No worries. We start to count over 1, 2, 3, looking to get long here. Market size wants to go lower, takes out this number 1 low. We start to count over 1, 2, 3. Finally, are able to get long here on this last attempt. Now, let me tell you why I like it when these no trigger or voided trades occur. Somebody will get a gold star on their crown if they can tell me why I like when these set up. All right, so here's why. We have lows, lows, or lows, new lows, new lows. What's likely happening? We're likely having some type of divergence. So whether you use RSI, MACD, stochastics, things like that, we're likely making some type of divergence. We got new lows, new lows, new lows, but we're likely making higher lows, or i.e. no lower lows on whatever oscillator you may be using. It's just one of those other things that we like to add for that additional confirmation. All right, 1, 2, 3 pattern trade management. Confirmation, again, is of entries on a break above the 2 or B point for a long, or a close below the number 2 or B point for a short. Extra strategies: if you're only trading one contract, whether it's a futures contract, option contract, Forex contract, or one share of stock, I would say strive to go for the distance between the 1 and 2 as your initial target. It's uncanny how more often than not, they'll go tag that off into the tick and then reverse. Now, if you have the flexibility where you're trading multiple shares or contracts, really where we all want to be, to have that scalability factor, that's where I would say, hey, take a third off or half or 2/3 at that initial distance, and then you can trail your balance with however you choose to manage your trade. Nobody can tell you how to manage your trade, but I, for one, like to use good old-fashioned price structure, support resistance levels, trend line analysis, but they come a dime a dozen. You have to figure out what works for you, whether it's moving average stops, 2 to 3 bar candles, par SAR, fib numbers, whatever. And we'll talk about that later. So I've showed you that this setup works on any market, whether you trade pips and Forex, Pepsi stock, pot, potash or pot stocks, pork bellies, or the Polish zloty. And on any time frame, where you trade a tick, 15, hourly, daily, so on. And any trading style. Are you a position trader, swing trader, a day trader, scalper? What is everybody's trading style? Do me a favor, just type out, what is your trading style? Take a swig of water here. So we've got mostly a lot of swing traders. I would say overwhelmingly most swing traders. Got a couple scalpers in there. It's probably the most difficult style of trading, I would say. Day and swing. Yeah, good mix there. Just starting, not sure. That's great. And the point is that you've got to find and determine what your bread and butter is. Nobody can tell you that, hey, you need to trade on this time frame or this style. You have to find out what works best for you and your situation. So I found that my bread and butter is, I like the 5-minute on the S&P, NASDAQ, crude oil, currency futures, occasionally a 30-year bond, and then the 4-hour for currency futures, a handful of commodities, FX, and then the daily for all markets, equities, equity options, futures options, and FX. When I got started in my trading journey, I was looking at end-of-day charts. I was doing my analysis in the evenings, early morning, placing my trades, and I was going off to the workplace. This was long before people were checking their smartphones in their cubicles. I just didn't have that option, but it was probably the best thing that could have ever happened to me. So again, you've got to find out what works best for you. So you've seen the proof. Let's look at some real trade examples. Not to say that what we were previously viewing were fake examples, but let's talk about some real trade examples we've utilized in some of our services. We're going to start here with crude oil. You guys and gals can read the text on the right. I'm going to look at the chart and work myself from left to right. So everybody's pretty much familiar with crude, whether you trade CL futures or maybe USO or some other leveraged ETF or energy stocks. Everybody likes to talk and track crude. So here we have a daily chart and we have a 1, 2, 3 over here on the left. Why? Because it's a 52-week high. It's a smaller 1, 2, 3 setup, I'll give you that, but nonetheless, it's a still valid 1, 2, 3. So once we spotted this 1, 2, 3, we already know all of the key components of the trade. We know where we're getting in on breaks or closes below the number 2. We know our initial risk is above the high of the 1. And we know our initial target is the distance between the high of the 1 measured to the low of the 2 measured down. You can see once we broke down and got a retest or 2, it quickly met our $3 or $3,000 per contract price objective. Then we went into sideways or consolidation mode. So I get asked all the time, does it work in range-bound markets? Well, theoretically, yes, it should, right? Because we're only looking for new highs or new lows, but you can trade range-bound 1, 2, 3s. I typically do not, but this is a nice 1, 2, 3 inside this range. 1, 2, 3. We get a break above the number 2, and it ends up moving north into a nice profitable trade. But we get a new number 1 here. This high is greater than that high, so we get a new number 1. 1, 2, 3. Now let me tell you why I got excited about this setup. Well, one, because of the high probability nature of the 1, 2, 3 top that we've been talking about. Secondly, we are now at a time of year from a seasonal perspective where crude oil and energy markets in general typically tend to trade to the downside. So when we have those two things line up, it's what I like to call the perfect marriage in trading. So we got short this market. How? We sold crude futures, we bought puts, we sold call spreads, traded USO and other leveraged ETFs. We quickly met our $4 or $4,000 per contract price objective. And this market ultimately traded down another $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. And all we did is trail our positions until we either got we got stopped out, or 2, we had a reversal setup. And you can see we have potential number 1 bottoms forming. 1, 2, 1, 2, 3. Okay, so now look at this right here. 1, 2, 3. Got really, really excited about this setup. This was a juicy setup. And we have probably my second favorite pattern, which is a triangle. This is a perfect textbook triangle pattern. And third, we're at a time of the year from a seasonal perspective where the markets tend to trade higher. In fact, this is one of the best seasonal trades I have in my back pocket, is to get long energies around this time of the year. But what happened? The market broke to the downside, as it probably should, because it's in a continuation here, and sold off another $10 or $10,000 per contract. So just by waiting for the number 2 breakout, which we did not get, kept me out of a losing trade. So we finally got this one flush down here, finally got our final low, 1, 2, 3, finally broke above, when it met its $5,000 per contract price objective, and then more. All right, let's talk about gold. Here's a daily chart of, this is actually GLD, the ETF that tracks gold futures. I prefer to trade or look at the futures charts first because it's going to be a lot cleaner, a lot more fluid. You're not going to see all these gaps. But regardless, if you want to start with the ETF, that's perfectly fine. So here's another market that everybody loves to talk about and speculate. I get a kick about these people that subscribe to all these expensive newsletters and listen to these pundits. Gold's going to go here, gold's going to go there. Who cares? Look at the chart, look at and let the price action help dictate to where it's likely headed. So here we have a 1, 2, 3 top. Market breaks down, gives you a couple of retests, meets our $4 profit objective. Here we have a 1, 2, 3 bottom, double bottom as well, breaks above, gets your retest, reaches $2 profit objective. Then we go into sideways mode. Again, like that crude example, you can trade these 1, 2, 3s inside the range. I'm only looking for new highs or new lows, but here's a nice 1, 2, 3, boom. Here's a 1, 2, 3, boom. Very nice, beautiful trades. So again, I'm waiting for new highs or new lows, and you can see that we're starting to make new lows. These lows are taking out these lows. Here we have a 1, 2. Here we have a 1, 2, 3. You can see this one gaps down, takes out that number 1 low. So we start the count over. 1, 2, 3. Gaps higher 2 days in a row. Can guarantee it wouldn't see that on the futures chart, but that's okay. gap, gap, we come back down, retest, also get a trend line retest, and hooks back up. That's our confirmation to get long. How? We buy gold futures, we buy GLD, calls, call spreads, sell money put spreads, however you like to trade. So I want you to remember that CRUDE chart, this gold chart, and the subsequent charts, because I'm going to show you something pretty special. All right, here is Delta Airlines. This is probably becoming redundant by now, but I'm just trying to show you how often these set up, regardless of what market you trade. Here's a 1, 2, 3. We gap higher, we pull back for the retest, goes $4 plus. Here we have a 1, 2, 3. Market actually gaps down below the number 2 breakout here. I don't particularly trade the gaps below. I've got students and members that will trade these aggressively, so they're selling stock, buying put options. I like to wait for the retest or the hook back down. But here we have another opportunity to get short. 1, 2, 3. Market trades down below the number 2. We get a small retest, trades $8 plus, and then we have one last long here. 1, 2, 3. Market trades above, trades higher, pulls back, and then goes up $8 plus. And then for you Forex traders, here's a 4-hour chart of the CAD Swissy, the Canadian dollar versus Swiss franc. Here we have a multi-session low, also have a double bottom, 1, 2, 3. Again, the aggressive traders are getting long on the initial breakout right here, or if you wait for the retest or hook back up, you're filled on your 70 pip profit objective. And now we just flip to the short side. We're just watching patiently for a 1, 2, 3 top. 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, nope, 1, 2, 3. Okay, we finally get a 1, 2, 3 top. It's a smaller one. Trades down sideways and then hit your 40 pip profit objective. I get asked all the time, does it work on an intraday chart? Of course it does. This is a 5-minute chart of the mini NASDAQ. Here we have 1, 2, 3, breaks above, hooks back above, hits your 13-point profit objective. Here we have 1, 2, 3, breaks down, trades sideways, gives us a little bit of heartburn, finally flushes low, gets our 20-point profit objective. And then we have, this is probably the last hour of the day here, 1, 2, 3, breaks above. If you're lucky enough to get filled there on the retest, you're filled on your 30-point profit objective in about 2 bars. So why are you here? You're here to learn my mechanical done for you strategy for all markets and all time frames. Have I shown you enough proof? Have I shown you enough proof at this time? This is the part where I ask you, have I fulfilled my promise? And I'm going to answer all of your questions at the end. I'm gonna take another swig of water here. And if you type no, I won't take it personal, but I'd love to know why. So everybody, so yes so far, no no's. I appreciate the kind comments. But wait, there's more. You knew it was coming. You knew it was coming. You knew it was coming. Usually when the individual says, but wait, there's more, it doesn't end very well. And in the South, they say, hold my beer and watch this, and it certainly doesn't end well. But I can guarantee you this will. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a pinning setup? I don't know about you, but I would think that would be pretty amazing. So, do you remember the chart examples we just went through? I hope you did. I hope you do, because it was just a few minutes ago. But let's refresh your memory. This is that same crude oil chart we just looked at. So, you're smart boys and girls. You probably figured out what the arrows and the lines are, but let's talk about what they mean. The green arrow is your number 1. The red arrow is your number 2. Your blue arrow is your number 3. 1, 2, 3. Pretty simple. Now, what about these chevrons? This is not a sell signal. This is not a buy signal. All this is a visual aid kind of waving at you saying, hey, we've broken or penetrated below the number 2. Or, hey, we've broken or penetrated above the number 2. This is the bar that took out the number 2. This is the bar that took out the number 2 high. So if and only if we get that break, you're going to see the chevron or this little white arrow print onto your chart. And if and only if that happens, you're going to get the 4 lines print onto your chart. Well, what are the 4 lines? The blue line is your breakout, or could be considered an entry level. Your red line is your risk or your stop. Your lime green line is TP1 or profit objective 1. and your dark green line is TP2 or profit objective 2. Now, if you recall, TP1 is, excuse me, is the distance between the high of the 1 measured to the low of the 2 measured down. And TP2 is simply 2 times the distance of TP1. All right, now let's look at gold. Here's the gold example, 1, 2, 3 bottom, breaks above, it's TP1, TP2. We don't get any signals, arrows, lines right here because remember the settings are set to look for new highs or new lows. But here we have these new green arrows. Why? Because they're saying we're making new lows. Here we get that last example here, 1, 2, 3. Here's that gap, boom, boom, comes back and retests, hits TP1, TP2. You can see over here that we're looking for a new 1, 2, 3 top. Let me go back to this crude oil example real quick. Why? What are all these green arrows? Why? It's because we're making new lows, new lows, new lows, new lows, new lows, new lows. Finally, stop making new lows. We stop making green arrows. So we get 1, 2, and then here we get a new lows, 1, 2, 3. We never break above the number 2 highs. So hence no chevron, hence no line. So I just want to make sure that was clear. All right, here's the delta example. There's a long, there's a short, there's a short, there's a long. Here's 5-minute NASDAQ. 1, 2, 3 top. We break down below the number 2. We hug that breakout level. Hits TP1, hits TP2 to the tick, and TP2 actually happened to be a new session low. So we start a new number 1 count. 1, 2, 3. Market breaks above or hooks back above. We hit TP1. We don't quite hit TP2, but it's good enough for government work. We shouldn't have lost any money. We trade back lower, making a new session low. This low is lower than this low, so we get a new count. 1, 2, 3. Market just nips its head here above the number 2, printing the lines for us. We come up, hook back up above. We hit TP1, and as we're looking and waiting for TP2, notice that we're getting new session highs. So that clues us in that, hey, we may need to get ready to reverse this market, okay? 1, 2, 1, 2. We do end up hitting TP2, and then we end up getting short. So we break down below the number 2 here on this bar, comes back up, and then trades back down his TP1, TP2, and you see we're looking for a new 1, 2, 3 bottom down here. All right, so is this trading for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the paralysis analysis, indicator overload, if you just want to simplify your process and add a new strategy, or if you need a very specific step-by-step mechanical plan that you could do part-time, this training could be for you. So I like to tell this little short story here. When I had this built out, I had this program, I brought my wife down to my office who teaches ballet part-time. I brought my 2 girls down who were like 4 and 5 at the time. Trust me, they don't know a flying flip about the markets. They don't even know what I do, regardless of how many times I try to tell them. So I showed them the chart, showed them what I was trying to do. And of course, after they settled down and got over the excitement of the candles and the colors and this and that, they understood what I was attempting to show them, what I've been sharing with you for the past 40 minutes or so. And so my point is that if they can understand it, then you certainly can too. Most of us don't remember learning how to count to 3 or learning our primary colors, but that's about all you need to know with a dash of common sense. So I do have a special offer for today's workshop attendees. I do limit this to 25 people. Because I'm a human being, like I said before, I do manage my own inbox. I have a support team, but I do manage and monitor everything that comes through. I actually enjoy communicating with students and members, so we do have to limit this because there's only so much time in the world. And the offer is this. It's the 3S code high-low indicator and scanner. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. The offer also includes chart pattern principle, PDF manual, and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. So what the heck is the 3S code high-low indicator and scanner, you ask? Well, let me show you once again. This is the 3S code plotted onto a chart of Thinkorswim that you've already seen. This is a daily chart of CREE. There's the short, there's a long. Here's a daily chart of Bank of America. There's a long, then there's another long. Nice, easy, clean, simple swing setups. Here's a daily chart of Love, LUV, Southwest. Here's this short, hits TP1 to the tick. Here's a short, whoops, bad trade, that's a loser. Get another shot to go short right over here. And then why do all the work when you can let technology do the work for you? Here's a screenshot of my Thinkorswim platform where I'm running a scan for 1, 2, 3 tops in the Russell 1000, only stocks that are optionable, $20 a share or greater. I hit the green scan button and voila, I get my results. And here is a screenshot of some watch lists. I have one monitor dedicated to watch lists where I'm scanning multiple asset classes across multiple time frames all at the same time. And you can do the exact same. So we've been looking at charts there on Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here is NinjaTrader 8. This is your indicator component. Here's your scanner component. So what it looks like on TradingView. Here's your indicator component. It's a 4-hour chart of Apple. There's a long and then a long. And then here's a 4-hour chart of the Euro Kiwi on MT4. There's a long, there's a short, and then there's a long. So full disclaimer, there is no scanning component available for MT4 or TradingView. It just simply doesn't exist. Trust me, I work with a lot of programmers and there is no scanning component available for those two platforms. If you know some type of Russian programmer, please introduce them to me. We'll have that puppy built out. But right now, you get the indicator for all 5 platforms, but the scanner is only available on TOS, TS, and NT8. So we know there's no real crystal ball in the markets, but I like to view this as one that provides me a daily process. I'm letting the platform scan the markets for me, locate the setup, I go to my platform for entry, and then I manage the trade through exit. And you can start doing so today with the 3S code. So here is the special offers. 3S code high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to include the chart pattern principle PDF manual and trading guide. Chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. I'll explain what that is here momentarily. We've recently offered this on the internet, no joke, at these prices, $19.97, $14.97, and $9.97. But for today's June Toasted Trader Indicator Special, we're pleased to offer this for a one-time fee of $397. The offer link is seasonalswingtrader.com/code. I'm gonna put that into the chat window. We go seasonalswingtrader.com/code. Hopefully everybody can see that. And it's a one-time fee of $397. So let's talk about what the indicator and scanner includes again. I've got a ton of questions here and I appreciate the interest, but I'm going to finish the slides here. So the indicator and scanner, again, you're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas. It's going to include the entry, exit, stop, and target levels, all color-coded for easy reference. Customizable settings, multiple look-back periods. So if you don't like red, you want hot magenta. If you don't like lime green, you want puke green. You can change those colors. The multiple look-back periods. So that's what we mentioned earlier. So if you want to dial it in a little tighter, the look-back period to find more trade opportunities, you can do that. If you want to expand it out and find less, which will probably give you higher probability setups, you can do that as well. You can scan for setups only, or trigger only, or both. What does that mean? Well, when we first had this built out, you could only scan for setups, meaning those that were in the process of setting up. They had not broken above the number 2 or below the number 2. But I had a student write in and say, hey, I would love to see a scanner for those that have triggered, meaning those that have already broken above the 2 or below the number 2. They've already triggered into the trade. I said, well, let me go back and check with my programmers to see if that can be done. And we built it. We built it for all of those platforms, and we didn't charge a single red cent. In fact, a lot of the enhancements we've made over time have been from you, from students and members, and we have went in and customized those for you and didn't charge a dime. You get all these updates for free. You can scan for tops, bottoms, or both at the same time. You can scan for intraday setups as well as swing setups at the same time. You can scan for stocks, futures, Forex, ETFs at the same time as well. Bonus one includes a 90+ page chart pattern principle trading manual. You can download it to your desktop. You can print it out, use it for firewood. I don't really care, but you're going to learn how to read charts, how to identify trend, range markets, other high probability chart patterns, seasonal market trends, and more. Bonus two is my 25 top option strategy guide, literally strategies for all account sizes, whether you're just learning to trade basic calls and puts to more intermediate and advanced, such as condors, verticals, butterflies, diagonals, and more. And then bonus three is access to our private Discord channel. Very proud of this. We just recently released this about, I don't know, 3 or 4 weeks ago. And if you don't know what the heck Discord is, don't worry, I'm pretty new to it as well. I'll show you exactly what it is. But I think it was built for gamers or something, and I'm certainly not a gamer, but it's more like, it's not a trade room. It's more like kind of a chat room. It's a hub where basically us as traders, again, like-minded individuals such as yourselves, can come in, share charts, share analysis, share commentary, what's working, what's not. You know, hey, look at this symbol, look at that symbol. I mean, we can't, as humans, can't possibly follow all of the markets, time frames, or just hundreds or thousands of opportunities every day, and we miss things. You know, we have to eat, sleep, you know, hang out with our family, things like that. And it's a hub where people can come in and post ideas and analysis. So it's really cool thing. These are just some unsolicited testimonials. I don't ask for them. They come in all the time, very pleased and humbled. But most importantly, I'm happy that people are taking action and profiting using the 3S code. Here's a example of just another trade setup. These were all based on the 3S code. You see crude, unlead, euro, pound, nat gas, all using the 3S code. Most of my signals are generated from the 3S code. And then here are some examples of my platforms. My Thinkorswim account where I do most of my equity option trading, my futures account here where I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And then finally, just one last example here of a nice, easy, clean 2-point trade for $100 a contract on the E-mini S&P. All right, so here's the offer. Once again, it's a 3S code. It's a one-time fee, seasonalswingtrader.com/code. I've got a ton of questions here, and we're going to, let me scroll up and look at all of your questions. All right, so what vehicle do I use to trade the break of the number 2? Just depends on what market that I'm looking at, you know, in what time frame. So I love to trade options. So yes, I use the 3S code on the 4-hour and the daily and the weekly, primarily to trade options. It'd be options on equities as well as options on futures. If I'm on a shorter time frame, I'll just trade the outright. I'll trade minis, micros, full size, depending on my conviction. That'd be in the futures market as well as the FX. I primarily prefer credit spreads. I will be a call buyer or a put buyer depending on my outlook on the trade, my time horizon, implied volatility, things like that. I feel like there's a time, excuse me, a time and a place for each, but I prefer credit spreads over just debits. I'm looking at near-term tops, lower highs and lower lows, and the downward short-term trend. It just depends on the look-back period. So the indicator will show me and will print the 1, 2, 3 tops and bottoms for me, and then I'll do my analysis from there, whether or not I want to take the trade. Yeah, we'll absolutely look at some charts. Is it the same as double top and double bottom? Kind of yes and no. It just depends on the depth level of the retracement, and that is another setting that you actually have the ability to adjust. So what I'll do here is just show you the settings. Right, so can anybody give me a thumbs up that you can see my chart here? Just want to make sure. Sometimes when I move charts around and things on the screen, it doesn't, they freeze. You can see that? All right, so all right, so what you'll do here, and the settings are going to apply to whether it's TradeStation, NinjaTrader 8, so forth. They may look a little bit different, but so what I'll do is I'll drill down here, and this is basically, you know, these are out of the box black and white settings. I mean, these are the bare bones settings here, but you can trade, or excuse me, you can adjust all of these. I like to use kind of the bare bones settings. You can see they're set at 1 because I want to be flagged or I want to be shown all setups. And then I'll go in and make the determination. So like right here, just to give you an example, we've got this minimum bars between the 1 and 2 as set as 1. That means that it will trigger, let's say that this high was higher than that high, you would only see 1 bar. Now me personally, I do like to see more bars between the 1 and 2. I like, or between the 1 and 3. I like to see more bars, but I've got it set to only 1 because, you know, I still want to see it, and I still want to see it shape up and form, you know, during real time, and I'll choose whether I want to take it or not. And here's where, you know, you can change, you know, you can change the colors and, you know, however, whatever other visuals and things like that that you wish to do. Let's see. No, I don't. So I don't provide the shared scans. Those scans are unique to you based on your settings, and that's unique to you and your computer. So like right now, if you download and install the indicator on your charts, you're going to see exactly what I see. You plug in YY, you're going to see this. I mean, what I see is what you see. What you see is what I see. Now, if you start, you know, changing the settings and doing all that kind of stuff, well, then obviously we're going to have different potential setups, right? So the scans are unique to you, and depending on whatever you're scanning for. I mean, I might be scanning on a daily time frame across stocks. You might be scanning on a 4-hour chart of Forex. You know, it's all going to be different. So Tim, the TOS does not have the capability, at least that I'm aware of, to have that auto trigger set up. But what we have done, and I'm getting a little bit ahead of myself, but what I'll show you, well, since I'm here in the members area, I just wanted to show you so you can see exactly what you're getting. Here's the Discord. Oops. Here's the Discord information, you know, how to download, the links and all that good stuff. And then here are all of your bonuses and resources, you know, a lot of unannounced bonuses and resources as well. But we've got PDFs and videos, how to customize the indicator, how to set up scans, day trading, swing trading, all that jazz. Thinkorswim, here's your, it's like something, this is on my side, it's not on your side. So here are the videos, how to install, PDF manual. This is a little video I did on how to set up and add the seasonality widget inside TOS. It's a free indicator or study. You don't have to use it, but I like to use seasonality in conjunction with the 3S when I swing trade stocks and commodities. Here's TradeStation V10, V9.5. Here's NinjaTrader 8, Trading View, and then MT4. So that's a sneak peek inside the members area. So okay, yeah, I did promise you Discord. So this is what Discord looks like here. You can see we've got channels or threads within the channel. We got posting FX charts, futures charts, stock charts, intraday swing, all that. We've recently had a backtester and optimizer built out as well. We've had it already had it built out for Thinkorswim and Ninja. We just wrapped up Trading View this week with my programmer. Now he's working on Ninja. So you can kind of come here, and again, these are just based on these settings. So you can see, I mean, there are literally thousands of possible scenarios. It would take a lifetime to run through all of the settings, but that's what's great. You can use the optimization. This is a 4-hour chart of the euro. This is gold, 1 hour. So it's very, I mean, look, this is built for you guys to come in. You can come in and test it. Oh, that's a separate deal. But, I got asked, well, what's the win-loss ratio? What's the success rate? Well, it all depends on the individual trader. I mean, we're all trading different account sizes and contracts and managing trades. I have a rule, and this happens to be fitting because I have a rule where I don't trade into a 200-day resistance, nor do I trade into 200-day support. So I wouldn't have taken this trade until we got up above that 200-day. So I leave a little bit of skin on the bone here. It's only maybe a couple bucks, but I want that extra confirmation. You don't have to put the moving average on the chart. You can leave it as naked as you want. I'm just showing you what I do. So like the S&P on Friday. Okay, this is a daily chart. Look at these last two setups on the S&P. Huge moves. This is a textbook setup. 1, 2, 3. We're below the 200-day moving average. We break down, get a couple retests. Huge move. Look at where target 1 is, 2,300. Why is 2,300 so important? Well, it's a nice round psychological number, yes. But look at this, and this is not by coincidence. I love when our targets have some type of significance. Look at this. Our target at 2,300 also happened to be the 2018 lows. Huge, huge number. 2018 lows. What do? We come back and hit it, and then we reverse. And then once we reverse, we get above the number 2. We hang out a couple of days, retest, and we get long. And as I shared this in real time, I said, hey, there's nothing wrong with this long, but be aware of the 200 days, just part of the common sense component, right? There's huge profits in this area. So I'm okay taking this. Now, if that 200-day was right here, I would wait. But doesn't mean that we can't come up and hit TP1. I just said, hey, be aware of that. Be cognizant of that. We might have a little bit of overhead. And it did. It rejected twice, rejected a couple times here. We had some issues. We finally got above, and then we hit TP1. And now we're reversing. You can, Leon, you can absolutely set it up on 2 separate platforms. So Tim, what I meant to finish my comment on the auto trade or EA, you will have the ability, once we're completely done, you have the ability to do that on Ninja, MT4, and TradeStation. Can't toss and trade if you don't have those capabilities. No, it's not always a 52-week high or low for the daily. It depends on your setting. My settings are 126 bars, which equate to about 6 months or so, but you can change that. You can feel free to change that, okay? The depth setting, that's how far do we want the retracement, like this retracement up on the 2, or this retracement down on the 2 for the 1, 2, 3 top. You can set it as a percent, like I want it to at least see a 25% depth. And it's all explained inside the members area. No, I haven't tweaked the settings here, Scott. These are out of the box settings, and I have a couple moving average overlays that I just like to use my own setting. All right, I think I'm running out of time here. I want to be respectful of everybody else. Let me share. Let's see. Membership is for life. There's no membership. You own the product outright. If you have any other questions, email me, support@seasonalswingtrader.com. I think I'm going over. Sorry to rush. Thanks a lot. I appreciate everybody's time. Have a great weekend. Thanks, Jeanette and TradeThirsty, and we'll see you on the flip side.